All right, cool. So we should be good now, and I should be sharing the screen. So reason why I said this to me was kind of an important week for how we close is just simply, here it is. I gotta star this. Hold on. And let me come over to NASDAQ. So I want to show you guys. So if you notice, just by looking at it overall, obviously we had our low to our high. Here's our discount retracement into that monthly bullish fair value gap right down here in discount and run for highs. Now, this also is a question that somebody had asked earlier in the chat, and I said I would talk to about it, in a little more length at this point. So when my model does complete, the thing I look for next is, do we create some sort of imbalance through previous buy side, right? If there's no imbalance formed, at that point, I say to myself, okay, well, there was no imbalance formed, so I need more information. I need to wait. But if we do get an imbalance form, to me, that's telling me that higher we go. That's showing me some urgency to continue moving higher. Now, of course, we're at all-time highs at this point, and like I've been saying for a little bit now, it does get a little difficult when I look left and I don't have any like clear draw on liquidity. So to me, people who are saying like random numbers, like on SPY, they're like, oh yeah, we're going to 525, 530. I would love to, I'm not saying that they're wrong or right. I'm just saying I don't know where they're getting that number from, because again, there's just nothing to our left in order to kind of give us any reason to believe that that would be a potential target, other than maybe it's a fib line or something like that. I don't know, or an extension. But otherwise, I don't have anything. But that's why, again, going back to what I said earlier, or what I started off with, was I want to see, this would be a pretty dramatic drop to close out this week, and I really don't think that's going to happen. But I want to see this monthly bullish imbalance here form. To me, that would show some urgency to move higher. Beyond that, if price is to create that order block down at any point throughout that, then we know, okay, we could look for lower prices. So that's just another caveat added into why I'm not really looking for lower until there is, some sort of indication, and to me, the market indicating that we are going to move lower would be some sort of imbalance, right? If we were just to go back in time and look through every single one of our little downturns we've had, every time we've created an imbalance, here's the one on the monthly, and again, it should translate to multiple different charts. But so now that's the monthly. I'm only bringing it up really because, again, this is the last week of February and we're getting ready for March. But on Thursday, I'm going to go over a bunch of monthly setups that I think could be interesting moving forward. So now for the weekly, if we take a look at where we currently sit, another week mounting that previous buy side or all-time high that we were dealing with from November of 2021. So look how the bodies have respected it thus far. Wicks, obviously last week there was a bit of a scare, but just a scare. I feel like I'm in like a fucking simulation or something. Every week it seems like the first 3 days of the week, it's a the world's ending and everything is going to shit, and then we turn out getting Tuesday low of week or a Wednesday reversal type, and pretty much erasing all of that bearish sentiment again. But the thing that's interesting about all of this to me is if we were to go over to our hourly chart, which should be right here, yeah. So if we just take a look at this hourly range, to me this is a obviously a massive range, but it is kind of showing me that we might look for about 200 points lower to start off the week. Not even 150, right? Do the quick math here. Yeah, about 150 points, or 170 points. Now, the reason I say that is, look, do I necessarily know for 100% certainty that this range is going to be set? I don't. But using things that we're able to back test and look for, when you do see that hourly imbalance, or any really imbalance on a higher time frame, that's going to tell you that range is set. And obviously we did get that nice rejection from it, and that was to close out the day on Friday. But when you get that hourly imbalance, to me, or really any time frame, if you look at a daily chart, a weekly chart, anytime I see that imbalance after whatever the specific run was, at that point I feel as if the range is set. We'll get that retracement into discount and then move from there. And you'll notice we do have two pretty big imbalances here on the hourly time frame down here in discount. So really, until that point, I'm not going to be all that bullish, to be honest with you. And that doesn't mean if you're trading an individual name, or you're looking at a name that might not have any connection towards NASDAQ or connection towards SPY. That doesn't necessarily mean that it's going down or it's going to be untradeable. Every individual ticker can be moving at its own pace, and that's why you can look towards relative strength versus relative weakness. On a lot of charts, I'm sure it looks something like this, where you have that pretty big range, and I just know two off the top of my head. Here's one, here's two, with huge ranges and a discount retracement. Again, probably going to seem like the end of the world, but to me, that really isn't the case. If you're to look at just this immediate run up on AMD from the other day, let me just drop that in real quick, and we can go from our low, no discount retracement, relative equal highs, beautiful. So at 172, you have a big imbalance right in discount, and you also have this one right down here below as well. So again, that's why I'm thinking that earlier on in the week we do get a move, and I'm going to draw this, and it kind of it plays very similarly to what I think we're going to see on NASDAQ, something like this. Or could there be a possible scenario where you see this, or this imbalance right here? I'm looking at turtle soup right here on AMD, that's why I have my alert set. But if we're to look at like this, something like that throughout the week, that's a possibility that I could see happening. But ultimately, I think this is an up week again. But again, starting off for the first 2 days at least, or until we get to discount of the range, I'm going to be leaning more towards lower in the short term. And ultimately, once we get down in here, I'm not going to be looking for lower. So, it's just a byproduct of when you have a huge range. Oftentimes, the retracements are pretty big, and that's why what I've been saying over the last couple of weeks, when everybody seems to think the world is coming to an end, oftentimes it ends up pretty poorly for those bears, because they're kind of jumping the gun, in my opinion. So but still, monthly, weekly profile, still looking for higher. I really want to see just that one imbalance move on this weekly time frame to just give us some direction for a little bit at least. Despite this, this action here currently, there's just no imbalance. It's not making me feel that confident on NASDAQ specifically. But if we were to look over here at ES, this makes me a little bit more confident. So while last week we created a bullish order block through previous all-time highs, I would love, and I'm not so sure this is going to happen. We can go and look at a smaller time frame and see if it makes sense. But obviously we made that bullish order block here. What is the high of this? Yeah, I don't think we're going to make an imbalance higher, to be honest with you. So we're dealing with 22 points. If we were to come over to our hourly range, let's just see where that would put us in terms of this massive range. Yeah. So to me, the one difference here is that ES did not make that imbalance just yet. So we'll see what happens over the next 49 minutes. And again, this is to me why, if you're trading SPY or QQQ, having this type of information is so important, in my opinion, because if we don't form that imbalance here, I'm not so sure that the range is set currently. But if we are to form this imbalance, great. I have a good feeling that it's going to go down into discount of the range. But also, if you look at SPY, where are we? You don't have any information yet. That's the thing. You're not getting these candles. You're going to wake up with a big gap instead of a specific area in which you can look for that. Let's say we do end up kind of trickling down overnight, off morning open, that morning volatility, maybe we sweep this low or something like that, or get into this fair value gap here and bounce, and then out of nowhere, you might be looking at 9:30, 10 o'clock and say to yourself, oh man, we're in the gap right now. But we're actually running into this hourly imbalance that could be the short down to that 50%, So especially when you're dealing with futures, forget it. I think you absolutely need that level of precision. But even if you are trading SPY or SPX, to me, it's like $4. If you're trading SPY, NQ, or even IWM, to me, having that additional information is just completely a no-brainer. So, but anyways, going back to SPY or ES, whatever. I'm not so sure that a bullish fair value gap is going to form here. I would like to see this bullish order block respected. So we'll see how that goes this week. But again, ultimately, higher time frame bias is still bullish. I think we will get somewhat of a retracement early on to start the week, just so that we can get down into discount of our overall bullish range that we've set from that Wednesday afternoon move, actually. So I got a couple setups that we could take a look at. Let me just throw some of these imbalances on here. There's that one and one more. Okay, so look, you might say, oh well, there's imbalances up here. While you're absolutely right, there are. Oftentimes I don't even mark them because I really don't anticipate them being more than just a speed bump in that situation, right? It's the same thing as, let's say we get this down move here. If we're to create an imbalance, but after we're in a bullish trend, bullish market structure, if we retrace down into discount, I really don't anticipate those bearish imbalances acting as much more than just a speed bump, right? So it's a very similar situation here. I think the range is set. I'm not really anticipating these imbalances up above 50% to be much more than just a speed bump. Maybe give us a little bounce to fill up another imbalance. And honestly, if that's going to happen overnight, to me, that's the most ideal, because one, it's really nice when you have all of these imbalances. I mean, you don't really have all that many on SPY, but if we take a look over here and we look at some of these imbalances, it is a very nice thing when after price gets down into discount of the range, and while you still had some bearish fair value gaps in the mix, they've already been tested and filled. Price usually moves pretty smoothly up through those. And if you have some that are left open, for example, this one at the moment, if we were to retrace lower and leave this one open without any sort of retracement into it, at that point, I would say, okay, that's probably going to be a speed bump. We'll run into here, then we'll retrace a little bit, get into one of these fair value gaps it creates on the way up, and then from there look for the next high. But if they're already all filled up, you can get a pretty serious explosive move. An example of that would be actually right here. I mean, look, you have one imbalance here, right? There's one. Here's your second. It's very similar to what we're looking at right now. But that would be bearish hourly fair value gap right there. Okay, what else? Let's see. Here's another one. Speed bump, ran into it. Next hour was a little, slow down phase. Didn't blow through it, but eventually we blow through it. Where's another one? Here's another one right here. I'm just showing you how it's not a big deal. I know they're green right now, but there's your bearish fair value gap here. Retracement into it. Rejection, good, that's filled. I don't anticipate that doing much of anything on the next time through. There it is, a little bit of a speed bump, but not much. And then here's another one. Retraced into it, rejects lower. Here's another one. Retraced into it, lower. So to me, those types of runs are my favorite, because we know what the current structure is. So if the current structure is bullish, by us kind of filling each one almost immediately on the way down, to me that just sets up for a really nice long. They're already filled, these imbalances, and when they get filled like that, again, especially when you're in a bullish structure, you're really not anticipating them be much more than just a little bump in the road. So that's just a few of the names off the top. Let me see. If you guys have any names also, feel free to drop them in. They are clowns, perma bullshit. Huh. I was waiting for this and was waiting for someone to mention on chat. I definitely put it in there and added everybody. It's guaranteed. What isn't? How much of a dip there is? Okay, yeah, we'll look at PanW too. Yeah, SPY is lame. I actually think SPY might start to wake up a little bit here in comparison to NASDAQ. For so long, we've had NASDAQ leading the way. I think there's a chance for SPY to take over the reins. So look at this weekly candle on SPY in comparison to NASDAQ. NASDAQ is kind of in the blender where SPY created that bullish order block. But let's look at PanW first because I know that's the one that a few people are
What
looking
is
at
that
here.
SMT when one goes up and the other one goes down?
Oh yes. So what smart SMT SMT divergence. So basically, and let me just pull up another blank chart here, and I'll show you. Ew. Let's get that off there. What are we doing? Okay. Hold on. Let's pull this up, and we'll go here. I'll show you. I don't know if I could cherry pick an example of it, maybe. So let's go to. We got to turn this one over to ES. So this again, this is. I think it's valuable. And I'll explain to you guys why in a second. We've been moving pretty similarly thus far. But essentially, what you would look for in SMT divergence is,
Maybe the
let's say
Russell's a good
NASDAQ.
example.
I'm sorry, what was that?
Maybe the Russell's a good example.
No, you can use the Russell too. Yeah, here. I'll pull up a Foursquare, and really, this is the way that he does it. I gotta be honest, I don't really. A lot of this stuff is useful, but do you absolutely need it? I'm not sure. So Russell is that RTY, and then we can look at Dow as well. Dow is YM. So if you were to look like this, let's just see if we could pick it off any of these at the top. So we'll just look at the sequence and see if there's divergence between the indices. So for example, if you have NASDAQ moving higher at one specific point and taking out a high while ES is refusing to do so, let's see, no, they're equal here. Let's see over here. Aha, okay, this is good. So if you're to look right here, notice how on both NASDAQ and SPY, we did not take out that high, right? But you'll notice that on Russell, we did, right? Let's just look at Dow. Dow followed the other two as well. So in comparison, you have SMT divergence here where you'd have a new high on Russell and you'd have a lower high on the rest of them. So with that divergence, you can actually look for lower prices at that point. So there it is. There's your divergence between all. And at that point, you'll notice that we did get that retracement. But ultimately, really doesn't change all that much of anything when you're talking about a larger landscape of things. This to me is more for a like intraday type of strategy. I'm sure you can use it if you were to look at it from a larger horizon situation, but at the moment I'm pretty sure we're all moving together, except that Russell is, while still doesn't look too bad to me, it's just the sixth sister of all of them. It's kind of moving much slower than the rest of them. So but that would be SMT divergence, and you can use all four of the majors to kind of ultimately get you to figure out the ultimate direction, which everybody obviously wants to know. But anyways, let me just see. CLJ4, I'm not sure what that is, James. But anyways, here's PanW. So obviously on the weekly, we know you got your low to your high. Now look, the reason why I don't have it set to any other of these little candles here is, if you were to look from this low to here, look, we didn't get a 50% retracement, and if we don't get that, to me the range isn't set. It sucks. We missed this trade because we did not get that retracement down here. Oh well, it is what it is. It happens. But anyways, there's your range, there's your retracement into discount, and we held it pretty good. Let me just zoom in and see something here. Very small. it's worth noting, I guess, but that's another imbalance there. So wick, really ugly wick, but nonetheless plays. You had that bullish order block here too as well. So from this point, this reminds me a lot like Boeing. What are some other ones? I'm trying to think. Really, Boeing specifically. It's just a matter of how long does it take for it to get back up to that point. Because if my model is to be successful at this point, we would say, all right, well, here's your setup. This is your discount retracement, right? And you see my alert there. That was from the other day when I traded it. I didn't hold it for Friday, of course, and it decided to run $12 or whatever it did, but $14. But anyways, at this point, you turtle souped as well. I mean, look where previous liquidity is. Come on, right? You just can't make it up. So there's that. I like the way that it recovered following that obviously big meltdown. This is a bearish, or a balanced price range, I should say. So let's put this here. That is a bearish volume imbalance. Here is, oh, whoops. That really is the tell to me, as we get this open. It was a little difficult because we didn't actually close this candle this way. So what I mean by that is, let's say we mixed in just one more candle in between and we left this open. To me, I would have felt great about it looking lower at that point, knowing that we didn't get down to discount of this specific range just yet. So obviously we're now at discount. Now it's a matter of how long does it take us to get back up to that 380, because ultimately I think that's the direction we're moving. But time is a difficult aspect to this. Now, I just want to show you guys Zscaler, because look at this type of move, right? There's your low to your high. There's your buy side liquidity or higher time frame liquidity sweep right there. Boom. We also ran into bearish volume imbalance. Okay. There's your retracement into discount. So I don't know when, if, whatever, any of the details here. I don't know if Zscaler has earnings or something like that, or maybe another cyber company has earnings this week. Ryan, do you know of that?
Zscaler has earnings on Friday, the 29th.
Okay. So this will be very, very interesting. There are two volume imbalances left open down here. So again, not 100% sold on this. And at this point, to me, way too late. What are you playing it for? Potentially, $24 when your downside risk at this point is like 80. It doesn't make sense. But just in comparison, this would be a situation where it got up pretty quickly following that big retracement lower. But if you look at something like this slug here, Boeing, we're still in discount. Nothing has changed really. It's just at what point do we put our foot in the ground and start moving? Really wouldn't feel, or I don't feel all that great about a long-term or higher time frame reversal until that order block is put in. And both times I've played this, we're at a point where we did, and closed the week below it. So we refused to put in that weekly order block. So that would just be kind of how I'm looking at PanW from that point of view. If we're to look at it from the daily chart, let's move in and see if we could pick up on anything else. So very similar situation. Let's look for our range. Okay, this high was taken out with that price run. Let's see. No discount retracement there. To me, the range isn't set. And there we go. So from this point, you have that. Whoops. And you have, this one's real small, but this is the one that I bounced from. There it is. There's your bullish volume imbalance. Now zooming in a little bit more, just note you have that bullish volume imbalance on the daily time frame right here, and ultimately you're working through this monstrous bearish volume imbalance to the downside. But again, do I view this as resistance per se, or more as just a speed bump? And listen, it could be a long speed bump. I'm not trying to say that it's not. But if the structure is bullish, we got into discount. To me, at this point, I don't know. I I think it's just the time aspect of us fighting time. Here's Pan W. Yeah.
My concern, though, is that I think Palo Alto will run in sympathy with the earnings of these other companies like Zscaler. So if Palo Alto had decent earnings but poor revenue guidance in the coming quarter, there's a good chance that the same thing will happen with Zscaler. And if they dump, Palo Alto will likely continue to retrace slower, wouldn't it?
Yeah, I
I
wouldn't
mean,
be surprised by that, and
it's a
that's a
gamble
good
for me.
point.
That's
And
why, I mean,
I was gonna
chat, I'm
no, go
not
ahead,
going to
Sam.
touch all the networks until after these earnings are done. These sympathies earnings, so to speak.
Yeah, so I mean, you kind of said what I was about to say, but uh,
Oh, I'm
not quite.
sorry.
So that's good. No, you're good. So what I was gonna say is, really, on something like this, I know I did it myself with Boeing. I still have Boeing for June. That's a lot of time for me. I'm fine there. But the way I'm looking at something like Palo Alto, is it tradable in a smaller time frame like this? Absolutely. Look what happened the last time on the hourly, right? We took this high here with this price run. We got our discount retracement into the hourly fair value gap, ran up for highs. One more time here. I'm sorry, whoops. There's your retracement. Oh, deep retracement here. There it is, hangs on to 79. Bullish order block on the hourly, takes off again. So can you trade this on an hourly time frame as like a day trade or a scalp, or maybe just a multi-day, like 1 or 2 day thing? Absolutely. I mean, look, it's still playing out just fine. But the tricky part is, now that you have the earnings of the other names and such, I mean, really, you're at this point, your risk is kind of, the range is kind of getting big. But in a situation where you do get the retracement, I think I have my alert set. Oh, this, yeah, that's pretty ironic. This was my alert from the other day, and look where it is again. 271.71. So this is our discount retracement, and just knowing that, hey, look, if we lose this imbalance right here, what is it, a $3 slip up? Then okay, I lose $3 on whatever the premium would be. But knowing that, hey, it's still a bullish range. That's the way I look at these kinds of names. And really, I should have probably played it like that on Boeing, but I bought June, so I'm fine with it at the moment. But so yeah, this is Palo Alto. I mean, look, it's still okay, and just knowing that you really don't. I mean, if you can't accept a loss, then I say, be pretty careful about this. But knowing that your risk is really only $3 in this situation, or $2, it's really not I know it looks small there, but it's not all that bad if I expand it. But we look at something like this for a move higher. That's possible. And let me just mark out some of these, and realistically, this should be down to here. This rejection here, let's see, it's got to be on let's see, the 30. A little bearish order block right here. But so yeah, that's Palo Alto, but just one where it's tough. If you look at it from the weekly perspective, it's just like, at what point do we really start to make our way? It's probably better off to maintain playing it on a smaller type time window, like the hourly or something like that. So yeah, we can look at net too. Knowing you have narrowed down where you think price is going, any tips or tricks you can share on selecting an options contract? Like, do you guys select a weekly, daily, anything we should avoid? Look, it's all really personal preference, to be honest with you. And really, like, what kind of risk management do you have? And you kind of have to know that for yourself. But the way I look at it is, if I'm looking to scalp something like SPX, realistically, like, I kind of want that move to happen like ASAP. And if it doesn't happen, I get out pretty soon. It'll be like a very tight window. And what I mean by that is, if I'm looking at, I don't know, if I'm looking at the 5-minute chart and there's a 5-minute imbalance and discount that I want to take a trade off of, I'll use that imbalance as the structure for my trade. So for example, let's just go over, let's see if I can just cherry pick something here. This is Tesla still. Where's, all right, for example, let's just say I'm looking to, scalp AMD. I know this might not be the best example. This is not moving at the speed of SPX per se, but let's just say, okay, on that sweep right here, I want to take longs. I want to look for that turtle soup move up to the highs. If that's the case, and let's say it's Monday or Tuesday, I know AMD is, you have time for that, but the way you can look at it is this. Do you want to play the entire range down to 160 while trading a weekly contract? Probably not. If you go that low from or far away from the money, odds are you're probably not going to make money even if it does make the move, right? So if you're to look for, let's say you say, all right, I really want to take the weekly. I think the move's happening right now. I'm going to set my order for, here and look for those highs. Realistically, you can look at it from this perspective. Okay, well, if I get a close on whatever time frame you're looking at, let's just pretend this is a 5-minute chart. Okay, or we could look at it from the hourly, but if I'm looking at the hourly, I'm not really going to take a weekly. I'll get to that next. But let's say this is a 5-minute chart and we look for that sweep. Realistically, a candle close and disconnect from that imbalance right there below this low right here, and I'm out. So really my risk in this situation is $1.20 or $1.44 to the downside. So I'm okay with that. And could it be a little more? Yeah, if it's a volatile candle or something like that, yes, absolutely. But I don't anticipate in that situation a 12-point drop in minutes on AMD. So it's not going to get out of hand. Really, it's going to be a loss, but not a huge one by any means. But now that's just on a 5-minute. I'm looking for a quick scalp. I'm looking to move it. I wouldn't say necessarily need all that much time in that situation. I think it's probably beneficial to get time, but if you're looking at it from like a small window like this, knowing that your stop is really not a big one, in that situation, to me, depending on the day. So if it's Monday or Tuesday, I don't hate buying weeklies, but just know that if that move doesn't occur quickly, if your stop's not tight enough, that thing could get out of hand to the downside. But usually if I'm looking at an hourly or something like that, I like to just get the next monthly. And I used to never do this either. Because I was trading SPX alone for a long time. Really all I was trading was 0 DTEs. But if you look at it from, an individual name, just honestly, it's a couple more bucks, but just that peace of mind knowing that your contract's probably not going to get all that ripped up from that, whatever your specific stop would be in that situation. So again, I think ours was like $1.40 here for potential $11. To me, going a month out, paying a little bit extra, that $1.40 drop really is probably not going to destroy a monthly contract. Whereas if you're trading a weekly on like a Tuesday afternoon, Wednesday, Thursday maybe, might hurt a little bit more. So that's just kind of one way that I look at it there. And then if I'm looking at the weekly, really as much time as you can get is probably the best thing you can do. And for example, we had Boeing, and while Boeing was moving in the direction we wanted, look how much time it was going, and then ultimately kind of gave it up a little bit here. But it's already been 1, 2, 3, 4, 5, 6 weeks of this nonsense, right? And I think that we got into it about a month ago, or I got into it about a month ago, I should say. But it's just a matter of like how much time until this plays out. I feel pretty good that it's going to go up towards here. It's just a matter of, okay, when is this actually going to happen? That's the biggest concern. So that's, to me, in that situation, getting as much time as possible is probably the most beneficial there. So I hope that helped a little bit there, Goonie. Do you ever think in super bullish bearish conditions to flip your fibs and target 618 as discount? I do that regularly when the trend is extreme in either direction. So you're talking about like if it's a bearish market structure to just go from high to low instead? Yeah, I definitely. You just got to look for the specific market structure to me. Yeah. I know I don't have all that many examples of a bearish market structure at the moment. Actually, I do. Here, I'll show you one. I just saw it yesterday, that's why. Check this. We're almost there. So there's what your bearish range would look like. And the reason why I have it in that bearish range is, if we were just to come on over here, I mean, look, ultimately, here's the thing where it gets a little tricky. So, you know, what was the run that took out that high here? You could very well say this to this, and we'll watch how we walk this up the entire way. Okay, so there's your discount retracement. There's your run for highs. Okay, good. One down. Low to high, retracement, bullish order block, gone. Okay, next. Okay, we didn't take out that high yet. So there's your discount retracement. There's your run for highs. Great. Okay, whoops. Here's another. Discount retracement, run for highs. Ready? Here's another one. Okay, what was the price run that took out that high? Really, should be here. To here. Check. There's your discount retracement. There's your run for highs again. One more time here. Here. To. Whoa, baby. See how this is a failure, right? We took out this low. This was the run that took out that high here. But by taking out this low, we have a monthly market structure shift on Netflix, believe it or not. So despite this massive move higher, in reality, the trend is technically bearish, right? Everybody's going to say, oh, trend is your friend. Yes, while I would agree with you, right? That's a short-term trend. We're kind of getting into murky waters here. If you look at it from this perspective, I mean, the overall trend dating back to 2021 on Netflix is still bearish. So us retracing up right up into this discount, this is beautiful. You have this bearish imbalance right here still. This is the one to beat. And at that point, you know, I ain't playing it. If I see it reject, maybe I'll feel good about it. But until then, I'm good on this. But we never had that market structure shift back on Netflix. So this would be a situation where it's bearish. And again, I know I don't have all that many examples of it recently, but we're also up 4,000 points in the last 4 months. So I really haven't been looking for lower prices, to be honest with you. So, but that was just an example of it. I wanted to show you because I saw it on yesterday, and it was one of very few that actually had that shift. But all right, let's go. We'll look at net for surface over here. Oh yeah, baby, look at that. Nice. Okay, so let's just look at net here for a sec because I want to see something. If we look at it from the run that took out this high right here, I mean, really, we can look at this from far out. I'm looking right here. Yeah, no, watch this. This is going to be a pain in the ass too. Ready? No discount retracement there. Okay, now just go to literally every one of these red candles. Nope, nope. Wait. Okay, so where's 50% of the range? 118.35. Okay, so we didn't get to 50% just yet. But at that point, let's just see something. Yeah, I'm pretty bullish on this one, Surface. I think you are too. You know, I was trying to find a bearish POV just to throw it in the mix, but I don't really have one. We did get into discount here. The discount is pretty large though. That's a 13-point range for, at this point, potential 18 points to the upside. I mean, at this point, not all that great. If it gets deeper into discount, I would look towards it. But ultimately, I think it goes there. It's just a matter of time. 132.45, and then you have this one untouched bearish volume imbalance up there at 153 to 159, and then you have another bearish fair value gap here. But again, if the structure is bullish to me, I'm not really looking at these to be more than anything than a speed bump. So that would be our net. Let's see, what else? Do we get any others in here? Oh, you want to look at CL? Okay, sure, yeah. This has been an absolute dumpster fire of a chart. Here, hold on. There it is. Here's CL. So, whoops, let me just fix this a little bit. Low to high. This is all energy names. All the energy names, they all pretty much look the same at this point. They don't look bad, but you have the relative equal highs up here, 114. And this, precise situation. This is a big ass range from a long time ago. So that's all the way back to 2022. There's your retracement discount. First run up higher, took out this little high right here, getting into that bearish order block. Rejection, back down into discount. Here's your range. Whoops. There's your discount again. I think it's going to happen. It's just a matter of when. And that's the game that I don't really want to play with this name right now, because look how garbage this PA has been for weeks on end now. So oil at the moment is kind of like China, just chopping garbage. Although I think China is looking a little bit better. Here, I'll show you. Ugh. I didn't say good. I'm just saying a little bit better. I still think it's going to come back down one more time. Let's see. This will be a test for it. But at least, this week has the potential to create somewhat of an imbalance here on the weekly for Chinese names. Again, not sold, but yeah. So what else? I got like another 10 minutes. Does anybody else have any other names they want to take a look at here? I'll just go through some of the ones that I looked at and liked. Okay, so first was NFEs. Here's NFEs weekly, and then we'll go back. We'll break it into smaller time frames again. But here, obviously, after shifting structure here, taking out that high, there's your run. That creates your breaker. Looks sloppy on the weekly, right? You might say, oh, that doesn't really look like one. If I show you the daily, it looks much better. So here it is. Whoops. Okay. Here's your, well, we can go from this perspective or this one, but low, high, lower, low, break above. There's your daily breaker. There she blows. There's your break above. There's your lift off. One more time. One more time. Turtle soup that low as well. So, but anyways, we're currently in that breaker still. On the weekly perspective, last week we made a retracement down into that bullish fair value gap on the weekly time frame. To me, all the time frames really check out on end phase. If we were to go over here, I know, do we really care about this? Maybe, maybe not. But if we look at it from a yearly perspective, there's your low to your high. There's your discount retracement into the 79% level. And, ultimately, I know it sounds crazy, but that would be insane if NFAs finished that. This is the monthly. It should be the yearly. Hold on. There it is. There's your yearly retracement there. But, whoops. So here is, again, weekly. There's your weekly fair value gap right here. I know it's a pretty big range, but if we were to go down to the daily, let's just note we have that bullish order block, or bullish volume imbalance right there, bullish order block here as well. Maybe on a sweep of this low I'd look, but we do have relative equal highs right here, above 1, 2, and then beyond that we got some runs. So let's look at the hourly and just wrap this one up. So hourly, whoa, okay, yeah, so you'll notice, right? You might have looked at that really briefly and said, oh, well, there's a little shift in market structure there, right? Not really. And the reason I say that is because, okay, here's the run that took out numerous sets of highs. There's your low, high, no 50% retracement, no 50% retracement. Still have not retraced down to 50%. Do we need to come on down here, down to, what is this? 111, I think. Oof, does that match up with our imbalance? No, it doesn't. I guess technically. But discount doesn't start until here. Here's a fair value gap. And here is, whoops, sell side right off that 50%. So that would be end phase on the hourly time frame. So again, obviously the move from 138 down, it's a big one. But while we're approaching discount, to me the risk reward just doesn't make sense at this point to look for lower, when in reality, could it be a turtle soup situation where you're playing for $4? Possibly. Even if you are looking down here, to me, your upside risk is too much, and prefer to avoid that. So, but that's end phase. Kava. Okay, let's look at Kava. Kava is not going to have much information for me. I think it just IPO'd recently. Yeah, okay. So here we're dealing with this. Whoops. Oof, sloppy. Yeah, this might be worth testing. When a name doesn't have, all that much in terms of like trading history, I think right now we're kind of in a situation where it's just really just situating itself out. But that's disgusting, but it did not take out that high at 58. So ultimately, I think that's where it's going. We took out this high here with really this price run. Actually, you know what? It's worth
They
noting.
have earnings this week. That's why I brought them up.
Yeah, it's tricky. For me to like feel good about downside on it, I would have preferred it to just take out 58. So, fact that it didn't yet. Here is the discount volume imbalance here. What else do we have? That's really it. I mean, you see how sloppy this is? I think it's got to be because it's a newer name, but you'll notice, you see how it's like really disgusting. And then you got one more right off 50%. So see how that one shakes out. It's just not all that much info there. All right, let's go affirm. Almost nice. All right, so we're in the bullish breaker on the weekly time frame. Low, high, lower low, break above these highs. We're now in that breaker, not quite at 50% of our current swing range, and we do have a bearish volume imbalance here. So to me, the most bullish situation here would be a low start to the week. I don't know if there's earnings or anything like that, but a low start to the week, get us down to like 34, and then whipsaw right back higher, and create some sort of bullish order block off of that. But yeah, not quite at 50%, so I'm not all that interested. Really would prefer to hold 30.92, but it's just pretty interesting. Look at that, 50% of the breaker right there. Boink. So that's a firm at the moment. Let's see. Apple hourly. Okay, so getting specific here. Before we look at, all right, this is a little sloppy right now. Sorry, but hold on. Let me fix this. But just really quick, let's just run through Apple and we'll get to the hourly last. But where is it? Okay, so obviously just the total slug in comparison to a lot of the other names, but there's your price run that took out this high here. There's your discount retracement into the bullish breaker, and currently chilling. Do we need to take out one more low and get to CE of the order block of the bullish breaker prior to moving higher? Maybe. These levels right here are daily levels, and that's really all you're working with before that 199.62. Daily again, you're going to see that we have multiple resistance levels overhead just for short. And now let's look at the hourly time frame. So if we're just disgusting. So we didn't take out this high just yet. These are relative equal highs though. See that? Yeah, second high did not take out the first, leaving behind relative equal highs, which is good. Now, I think my range might be massive here. Let's just take a look. Yeah, it is. Okay, so there's your first little retracement. Didn't quite take out the high yet. So yeah, we've been kind of just teetering along discount of this range. Let me look at this smaller range and see if we can find anything in here that might be of use. I think this is probably going to give, because I think we're going to start the week lower, to be honest. So if that's the case, I'd expect Apple to go a little bit lower. So you got relative equal lows here too. Maybe one more stop at 179 and then a move higher. That would kind of line up with what I'm thinking on NASDAQ too. So So that's Apple. Yep, no problem. Let's see, Snow and Nvidia, and then I'm gonna call it quits because I got Walking Dead coming on. Yeah, Snowflake really pissed me off. I was looking at it before I started setting a bunch of alerts for a bunch of different names, and I fucking whiffed on it. So still at this point, is the range set? I don't know. This is kind of suspect that we created that bearish volume imbalance right there. But still have not retraced to 50% just yet. Here is what I'm pissed off about. Yeah, okay, there it is. So, here's your first run. Low, high, retracement to discount, run for highs, check. Here's your second time. Oh, wait. Low, high, discount, retracement, run for highs again. Check. I just have this one on because I want to see if standard deviations matter or not. And then here's your last one that I fucking whiffed on right here. But there's your low to high, discount retracement, run up. So I think 237 will probably get hit. But you'll notice that I do have an alert. I'm being super picky here. It might not happen. But I got 227.04. If we sweep that, I would then use, just simply put, it would be about a $2 stop loss for a potential run $10. That's just what I'm looking at, and that'll probably be like a shorter dated type trade for me, but just a really much smaller risk for that potential move up to 237, and ultimately 245 is that one standard deviation. So again, I want to just see if that actually matters. It's easy to say it if you don't necessarily back test it or anything like that. But here is, hold on, I want to see something else here too, actually, really quickly. Hold on, let me just look at it from the weekly. It'll be more clear. Okay. You're killing me right now. Here, there's that. So 50% of this massive, hold on, let's just see this. Oh no, okay. So you'll notice there on that little pop, we actually got a 50% retracement, unlike a lot of these names. There's your bearish fair value gap. There's your move to lows. So at that point, we're complete. Here's our next one from low. Oh, look at this. Right off 50% bearish fair value gap, rip through lows. So if you sweep that high there, which I think we're going to do, you're going to get a bullish market structure shift and a bullish breaker. Low, high, lower low, break above that 246.52, and you got a bullish breaker. So not bad, not bad, not bad. It's a good eye. Whoever brought that up, let me see. Fistonator. All right, Nvidia, this one's going to be, unfortunately, I don't have all that much to say here other than sheesh. There's your run. We were so close, but we did not get a 50% retracement. Womp, womp, womp. Gone. So let's see if standard deviations actually matter. The first time it did, it played out nicely right to that 723. We mounted it with the bullish volume imbalance, and then last week you'll notice that after that gap we got into here. We did sweep that low too, very close. So here, I'll zoom in even closer, but yeah, we did. So the low of this candle is 663. Low of this candle here is 662.48, and we absolutely shredded. So you'll notice that the second long short that I posted on Twitter this week was actually Nvidia's hourly chart, and a bunch of you guys got it right. So earnings or not, there it is. Low to, oops, not quite there. Let's zoom in. And you'll notice, come on, zoom it. See that? No 50% retracement, range ain't set. There you go. They tried to play us, but it didn't work. Whoops. So even here, I kind of have it on the wrong one. It's very small, but there's your no 50%, no 50%. There it is. Boom. This is the one that I posted on there. I'll post the answer tomorrow, but you guys already know it. There's your retracement into discount. Whoa, filled up all those imbalances before taking off, and it's gone. So very similarly to AMD here, huge range, obviously, and discount of that huge range is pretty far away at the moment. So am I sold at this point that the range is set? Kind of, yeah. If it beats me here, then I'll be wrong. That's fine. But I'm thinking early in the week you might see, let's see, no discount retracement, no discount retracement. There it is. Oof, 734. Yikes. So 734 is 50%. At that point, you do have this bullish fair value gap. So maybe a wick down there into 50%. And then, actually, in reality, I can just move it here because I know no wicks on either side there. So that would be 50% of the range. So it could be a pretty nasty early part of the week here for NVIDIA. But all right, that's all I got. So